get a lot of questions from my subscribers. How do I identify the real order block? Which order block will make sense? Which one will fail? And in this video, I will address that issue. How you can spot high probability order block for your trading style, for your trading strategy. So without wasting time, if you are struggling to understand what order block is, watch this video till the end, because I'm going to reveal the 3 key things you need to be looking for before you trade order blocks. So before I continue, make sure you like this video, make sure you subscribe, and make sure you share this video so that other people will be able to see this video when the algorithm push it out. So the first thing first is you need to understand what order block is. Okay, order block is simply a particular zone that led to price manipulation. Order block is a particular zone that led to price manipulation. Okay, so first of all, you need to understand why order blocks. Why do we as fast money traders look at order blocks? We are looking at it in the perspective of what? Manipulation. You look on the chart, where on the chart did price manipulate people out of their trade? Either the buy side or sell side of their trade. Where did price take out stop losses? Because order block is a manipulative move. It deceives people that price wants to go in one direction. Then when people start stacking their orders in that direction, it clears their liquidity and then move in the other direction. So that's the first thing you need to do. Now, order block, you need to observe if the order block, number one, took liquidity. Okay? Number one, the order block take liquidity. Because I'm going to show you on the chart how to spot the best order block. Now, you ask yourself a question. When you see a particular order block, and by the way, order block is simply a move. Now, let me explain that. Most people will say order block is the last candle in terms of a bearish order block. There's the last bullish candle before the bearish move. Okay, they will tell you this is the order block, but this is limiting what order block is. Okay, order block is simply this entire zone here. Okay, this entire zone, because it manipulates people thinking that price wants to go high. But what happened? Maybe price took out some liquidity, price moved to the downside. So do not limit yourself to just looking at the last bullish or the last bearish candle before the move up. Example here, the last bearish candle before the move up. Okay, you don't limit your order block to just one candle. Understand the concept as a whole, then you have a better understanding. Now, what you then need to do when you understand what order block is, you can then decide to refine. Okay, you can decide to refine it to the last bullish or bearish candle before the move. Why do you need to refine? Because you are trying to aim for a better risk to reward ratio. Now, let me show you what you need to be doing in order to know which order block will hold, because there are a lot of order blocks on the chart. Everywhere is order block based on that example. But not all order blocks are tradable. Okay? Not all order blocks are tradable. So to help you know which order block is tradable, you need to understand these 3 things. Number one, that the order block must lead to what? Manipulation. Okay? And that manipulation is in form of what? Taking liquidity. Price must take liquidity. Okay? Like in this case, for example, we have some form of liquidity here. Okay? You can see these are the recent high before this move to the upside. So you can say that the order block is simply this move up. Okay? Or you can start from here. But I will consider this as manipulative piece, because a lot of people will see this as what? A form of what? Trend reversal. That the Euro USD wants to reverse based on this, And immediately price clear this, those that don't understand break of structure, they will think price will continue going and they call this a break of structure. Whereas this is not a break of structure. So this is not a break of structure. Okay. What I consider a break of structure is a body close. That is for another teaching. Okay. But right now we are looking at order blocks. So first of all, you look to the left and see, did this order block take out liquidity? Okay. If it did, then you can mark that zone, that particular candle, or the entire zone as a potential what? Order block. Okay. Number two things you need to know is that they did lead to a break of structure. Okay. Did that order block, after taking liquidity, did it lead to a break of structure? Okay. That's another thing you need to ask yourself. Okay. Break of structure in the sense that, no, when I say break of structure, I mean body closing below that structure low or a structure high. For example, this particular move here, did this move, this manipulation, did it create a break of structure? Okay, you need to ask yourself, this manipulation did not create that break of structure over here. Okay, so at that moment, if you are looking at this area now to trade as your order block, it all depends on what you see. Okay, so you need to ask yourself, did that order block lead to what? A break of structure. Okay, once you identify, by break of structure, I mean body close and not the wick. For example, this move up here is, to me, I do not consider it a break of structure because it did not close above. Okay. A close below for this now, for example, this is a break of structure here. Price closing below this low. Yeah. So that makes it a break of structure. If it wicked and come back in, then I don't consider it a break of structure. Now, we all have different ways to view break of structure. But I work based on principles. I work based on rules. So in my rule, I do not consider that break of structure, and in that case, I will not be looking to take trades based on that alone. Okay. Now, the last one is that did the order block leave form of what? Imbalance. By imbalance, I mean, was there a momentum candle, okay, with high volume that price moved sharply away after manipulating those areas? Okay, was there a sharp move away? These are the three things you need to do. For example, when you look at this move down, you have to look for imbalances. Imbalances are simply fair value gaps. Okay, just identify the fair value gaps. In this case, I told you how to identify fair value gap. If you don't understand, I'll put it up here for you to check. Check the description, the card section. You will see a video on identifying imbalance or imbalance price action, whichever one. Now, by imbalance price action, I mean you look at the first three candles, okay, in a drop. The first and the third candle should not touch in terms of their wick. They should not touch. Now, once they don't touch, it created a fair value. That is also a way for you to give that higher. That is a way to give that order block a higher probability of succeeding. Now, why are you doing all this? You are doing all this in form of giving weight to that order block. You want to be sure that if this order block is a high probability order block or a low probability order block. Now, if a particular order block do not have all these three present, then that order block is low probability. Does it mean you can't trade off that order block? No, you can trade off it. But are you willing to risk all the time such order block? It leads to what? Losses. That is why you give yourself rules as a trader, especially the beginner trader. You don't need to be trading based on impulse. You give yourself rules, have a trading plan. So you must make sure that the order block have these three check mark. 1, 2, 3. Take liquidity, lead to break of structure, create what? Imbalance. And you should understand that the reason for order block is to create price manipulation. Now, I'm going to look at this chart here, okay, and then analyze this. this is what? This is an order block. But for me, for this particular trade here, I'll be using demand and supply concept to take this. I won't be trading this based on order block. Why? Or if I go to a lower time frame, it might give me this trade here. For example, on the daily for now, this order block here do not qualify for trade based on these three things. Now, the first one, it took liquidity, great, checked, okay. The next one, it did lead to a break of structure. It did not, okay. That was why the zone, to me, I would not be interested in that particular trade here, okay. Now, thirdly, did it trade in form of imbalance? Yes, we have imbalance here. Now, in this situation, the order block did not meet the three criteria. So I will not be engaging here. I will be engaging using other form of strategies. There are different strategies in my arsenal that I use in trading. But if I'm to trade based on order block, I will not be taking this trade. Okay? Instead, what I will do is to go to the lower time frame here and see if it met all the conditions. So let's look at the 4 hours. Yeah. Now, if you look at the 4 hours, on the 4 hour, the reason why that move happened was because on the 4 hour, it met all criteria. You can see we have a break of structure here, here and here. Okay, we have a break. So it met the 3 criteria. It led to a manipulation. It led to a manipulation of liquidity here. Okay, with this, it led to a manipulation. And it led to a break of structure as well. Okay. In fact, you can even look at this as break of structure, change in order flow. And also, was there any form of imbalance created? We have imbalance here, you can see. So, eventually, price came up here, okay, and tapped into that order block. Okay, you can consider this as the order block, the last bullish can do. Then this is where you can take the trade. But on this particular time frame, on the daily, we don't have a strong order block. Okay. On the daily, this move, this order block, do not consider being what strong. Why we were able to take the trades? Because we went to a lower time frame, which is also the 4 hour time frame, to confirm if that zone is tradable. Now, another example of a good order block is this here. You can see all this move created what? Liquidity grab. It took liquidity. Okay. It took liquidity. That is the manipulation there. Okay. Tapping into another form of what? Zone. Then created break of what? Structure. As you see here, we have a break of structure. Yeah. So as you can see, because this has met the first criteria, taking liquidity, the second one, it led to a break of structure. The third one, it created imbalance. You can see we have imbalances here. So it makes sense if price came back in, yeah, taking out this inducement for price to go lower. Even if we are to look at it in the future as well, maybe we are looking at that particular order block on its own. Currently, we have the price of Euro USD seated at that zone. Okay, at that zone. And you can see right now price is rejecting from that area. And that would have been a good trade for you to take the trade at least to the downside where we continue to push higher. So now what do you consider fake order block? Okay. Now, before I go into fake order block, does it mean that if an order block have these 3 criteria, it means it's an holy grail? No, it's not. Okay. There are other things you need to look at it before you look at the order block. For example, you look at where price is trading. Is it trading at discount or at premium? Okay. For example, here, in this case here, we have this particular order block taking liquidity. Okay, it took out liquidity, broke structure. Here. Now the question is, why did this order block successful? Why wasn't this order block successful? Okay, price went up and cleared it. There are reasons for all those things, because when you are trading as a trader, you should give room for losses, because nothing is certain in trading. We are all trading based on probability. Now, the reason why this do not hold, because as for me, I always like to trade full price imbalance field. Okay, like if you look above, you will see that there are imbalances still created, and that could be that price wants to go up to fill up that imbalance, because all of these are liquidity inducement. If you don't know liquidity inducement, you can check in my video here to know more about liquidity inducement. Yes, this order block met the criteria of the kind of successful order block we're looking for, but in this case, it serves as what? Inducement. You should not be trading all of these, because these are pools of liquidity. Okay, if you want to take price when it just take liquidity, it must mitigate fully, okay, before you can consider taking that trade. So in this case, price came up to clear this liquidity, including this order block. Now this is a trap here for smart money traders to get involved in here, okay, for a trade. But if you trade based on confirmation, you might not fall victim of this trap. But if you are placing set and forget, this will be a loss, and you can take it. There's nothing wrong. It met your criteria. But with experience, I know that price might decide to what? Come up in here. So in that case, I'll be looking for what? Confirmation. Not entering outrightly. Confirmation to come price trading into this hidden base and then moving away from it. Now, most people pick order block that do not have form of what? Imbalances. Okay? When you see order block without imbalance, you don't need to trade that particular order block. For example, here, you see here, this is an order block here. It took liquidity, broke structure, okay, but there was no imbalance. Now, because there is no imbalance, this is price efficiency, and as a result, price efficiency simply means price might easily go through them. Okay, might easily go through them, and that's what happened here. Price went up without even giving any form of what? Reaction. The key thing is that you must make sure you see all of this, and sometimes when order block is seated at pool of liquidity, just like this, you do not need to take that trade. Okay, as a beginner, you don't need to take that trade. Like this is not sitting at pool of liquidity, because this is a swing high on its own. Okay, and the other ones are far above. They are not equal high, but here they are more like equal, and we have unmitigated supply zone above. So when you have unmitigated supply zone above an order block, okay, and you look beside it, there are a bunch of what? Highs as well. That is low resistance, okay, liquidity, and price needs to take it before moving to the downside. Okay, I can give more example here. For example, you can see this is a manipulative move to the upside, and then it created what? A break of structure. You can see we have a break of structure here. We have a break of structure here. Price went down. Did it create any form of imbalance? Yes, these are imbalances. Okay, these are imbalances. So it makes sense for you. All of these are inducement. Price came and went down. Even when price is coming back, you can refine. When you see things like this, if on the daily we don't have imbalance, you can go to the 4 hours and check for imbalance in case. Okay, now you look at the 4 hour. Do we have any form of imbalance? Not really. You don't have any form of imbalance. Okay, but I'm sure within the 1 hour 15 minutes you will see form of imbalance, and that will be an intraday where you take the price and then target maybe 1 hour supply zone and demand zone here. If you have any question, okay, and you need clarity on other blocks, put it in the comment section and I'll be glad to do justice to it. Have a nice day. I will see you in this video.